Hi everyone, I'd like to welcome you to today's webinar over state and local tax. First, I'd like to introduce our presenters. We have Shane Stewart, Blake Fuquay, and Aaron Humphreys. Also, I'd like to let you know that we have attached two handouts, one which includes the slides for today, so you can download that and follow along. Also, if you have any questions, please enter them into the questions box and they'll actually be delivered to me and I will pass those on to the presenters throughout the webinar. Thank you, and I will hand it off to them.
Thank you everyone for joining today. We had over 100 registered and currently ticking up there with about 58 of y'all. I just want to also thank Blake and Aaron for joining me. My name is Shane Stewart. I am the director in charge of our state local indirect tax practice. We have Blake, who's a manager in our practice in our indirect tax, as well as Aaron, who covers our income tax side. So in this webinar, we will walk you through the U.S. Supreme Court's decision in South Dakota versus Wayfair, explaining the case's impact and the implications for sellers throughout the United States. If you make online sales, remote sales of any kind, or sell into multiple states, this webinar will provide you with the essential information on the path forward regarding Nexus. First, we're going to cover the background on the physical presence Nexus standard for sales tax purposes, and then discuss the post-quill expansion of Nexus by states, followed by South Dakota versus Wayfair, the background of it and the decision itself, and the impact on businesses, also the income franchise tax impact, and then how Weaver can help meet the new obligations or compliance needs that you may face because of this decision. All right, well, a little background on the U.S. constitutional restrictions on state taxing authority. While many of the principles in state taxation, including sales taxation, are similar from state to state, there are also many differences. Our current system stems from various state statutes and regulations, but because a great deal of state taxation occurs often during the course of interstate commerce, regulation also comes from the United States Congress and the United States Supreme Court decisions in multi-jurisdictional cases. The Constitution of the United States gives Congress the ability to regulate commerce between the states. The two main principles that are regularly discussed with respect to multi-state tax issues are the Due Process Clause of the 14th Amendment to the United States Constitution and the Commerce Clause, Article 1, Section 8 of the United States Constitution. With respect to the Due Process Clause in state taxation, the Supreme Court has interpreted this to prohibit a state from taxing a corporation unless there is a minimal connection between the company and the state in which it operates. It's fair to impose a tax. With regards to the Commerce Clause, the Supreme Court has ruled that the Commerce Clause prohibits states from enacting laws that might unduly burden or inhibit the free flow of commerce between the states, basically establishing that the taxpayer must have substantial nexus with the taxing state in order for the state to impose its tax on the taxpayer. So we're going to go into a little background on the physical presence nexus. It's really what has been the law of the land for the last 50 years or so. There's two main court cases that help establish the physical presence, and Blake, I'll turn it over to you.
Thanks, Shane. So National Bellis Hess, they were a mail order business that were operating out of Missouri. They did not own any tangible property in Illinois. They didn't have any sales outlets or representatives in Illinois. Basically, their only contact with Illinois consisted of mailing catalogs to customers twice a year. So Illinois came in and attempted to require National Bellis Hess to collect Illinois use tax. The Illinois Supreme Court agreed and said that National Bellis Hess is required to collect use tax from its customers who purchase goods for use within Illinois. So National Bellis Hess appealed to the U.S. Supreme Court and argued this violated the Due Process Clause that Shane just talked about. It's part of the 14th Amendment and created an unconstitutional burden on interstate commerce. In 1967, the Supreme Court held that the Commerce Clause prohibits a state from imposing the duty of use tax collection and payment upon a seller whose only connection with customers in the state is by common carrier or by mail. So why is this significant? Well, the National Bell Test decision set a standard. Basically, a taxpayer would have to have a physical presence in the state for a state to obligate an out-of-state vendor to collect and remit use tax.
So moving on to the next, most recent, up until last month's decision, the Quill Court versus North Dakota.
Yes, and this is basically 25 years later. Quill, similar to National Bell Test, was an office supply company with offices, warehouses in Illinois, California, and Georgia, but nothing in North Dakota. Quill didn't have any employees or tangible property other than a few licensed computer software programs to customers in North Dakota.
I think they were floppy disk at the time.
Yes.
A few of them that.
Yeah. Back when floppy disks were used, yes. So Quill did solicit business through catalogs and flyers and telephone to North Dakota customers. And this was important because North Dakota at the time required retailers that, quote, maintained a place of business in the state to collect and remit use tax. So in 1987, North Dakota's legislature amended the statutory definition of retailer to include every person who engages in regular or systematic solicitation of a customer market in the state. And they defined that as 3 or more advertisements within a 12-month period. Therefore, Quill fell under that definition. Quill said, we don't care, we don't have a physical presence in the state, and we're not going to collect the use tax. So North Dakota filed an action to require Quill to collect the tax effective in 1987. The trial court originally ruled in Quill's favor, finding it indistinguishable from National Bell Test. However, the North Dakota Supreme Court reversed because they stated that both the economy and law had changed and it's inappropriate to follow National Bell Test. So Quill appealed to the U.S. Supreme Court. The U.S. Supreme Court found that the Brightline physical presence standard was required to prevent undue burdens on interstate commerce and therefore reaffirmed the test under the Commerce Clause.
Right. So what we're getting at here is these two cases helped establish the physical presence as the law of the land for requiring remote sellers to, any seller to be imposed by a certain state's tax for sales and use tax purposes.
Right.
So that brings us to our first poll in question. I believe our moderator is going to read the question.
How many jurisdictions tax returns in? 1 to 3, 4 to 6, 7 to 10, 11 or more?
I'm interested to see how this question turns out. I know a lot of our clients are remote sellers, and a lot of our attendees are as well. Over the last 25, 50 years or more, we've had this physical presence standard, and a lot of planning around making sales out of state have been around those rules where if we don't have physical presence, we're using third-party shipper, we don't have nexus in that state. I think after we go through these slides today and consider the impacts of South Dakota versus Wayfair, and if we were to fast forward a year into the future and ask the same question to the same set of attendees, I bet you it would look a lot different. Maddie, do we have the results?
I do. Let me share them with you. So it looks like the majority selected 1 to 3. Okay,
and it's kind of in line with what we were discussing earlier today, and it looks good. So I'll be interested to see what this would look like a year from now. Well, moving on. So since Quill, which was the last Supreme Court case that discussed the nexus with physical presence for sales taxes, there has been an expansion of nexus legislation and laws across the states. And this section section, we're going to dive into those because up until recently, most of the laws in place were really considered unconstitutional. I mean, physical presence was the law of the land. And anyways, this will kind of show how states have really tried to push the envelope to get more taxpayers in their base. And anyways.
So these are some of the types of nexus that states have attempted to impose to require collection of tax. So we have affiliate agency nexus, click-through nexus, cookie nexus, marketplace nexus, and use tax notice and reporting requirements. So we'll kind of talk about each one of these more in detail.
Sorry, everyone. We had some technical difficulties. I hope you guys could bear with us there, but we've got it corrected. Moving on. So affiliate and agency nexus.
Okay, so affiliate agency nexus. This was one of the first types of nexus that states tried to impose after Quill. And basically that's when certain jurisdictions have laws requiring a remote or out-of-state business to remit sales tax when they have an affiliate or a subsidiary relationship with an in-state counterpart. So some example states that did this: California, Colorado, Illinois, Texas, Utah, Wisconsin. Back in 2010, for example, the state of Texas issued an assessment of approximately $269 million for uncollected sales taxes to Amazon.
Yeah, I remember this. This was a big deal back then. I think they had bought a company called Loot, which is, I think, located in Coppell. They had a warehouse there.
North Texas, yeah.
And anyways, they issued this huge proposed assessment. They were going to fight. It seemed like they were going to fight it to the grave, but ended up settling. And basically, Amazon settled in lieu of that tax to make a major investment, a capital investment, as well as a huge increase in hiring employees in the state. But you can imagine that if this had to get reported on a disclosure by Amazon, that this could have been material and could have had a lot of repercussions across the different states for Amazon. This is another way, states were, once we started passing affiliate nexus laws and agency nexus laws, even though unconstitutional, the states were going to push to enforce it unless someone else stepped in. Well, in this case, they settled. Then we had click-through nexus.
Yeah, click-through nexus was something, New York was the first state back in 2008 to introduce a click-through nexus idea, and this is where a retailer or service provider that contracts with a company located in-state who directly or indirectly refers any potential customers to the retailer through a web link for a commission or other consideration, then they also have nexus with that jurisdiction. So there's 22 states that enacted click-through nexus legislation, including California, Illinois, Maine, Missouri. So that was a relatively recent one back in 2008.
Well, and 25 years ago in Quill, you didn't have click-through nexus. See how the times have changed and business has changed, but the law hasn't been keeping up, and so the states were pushing ever further, just like click-through nexus, to expand their base and trying to capture taxpayers who, through a click-through nexus. And then we had cookie nexus, which is pretty funny in my opinion, but it's I think Aaron was going to say a joke about a Cookie Monster or something. That we're not going to go there. Go ahead. Sorry, Blake.
So, with Cookie Nexus, it's kind of somewhat similar to the click-through nexus, but it's really where a retailer or service provider that uses apps or places browser cookies on a buyer's computer and meets a certain sales threshold, and that they also have nexus within that jurisdiction. So Massachusetts was a good example. They previously issued guidance saying that any remote retailers making sales into Massachusetts and placed an app or a browser cookie on a buyer's computer, they had nexus with Massachusetts and had to collect the sales tax.
Well, yeah, that's important to consider. We had a question. We actually did an internal webinar for all of our Weaver employees last week. We got a pretty good question. It was how's Cookie Nexus going to be verified by a state? How would they know that you have cookies in their state? And I think the simple answer to that is if they're auditing a taxpayer there currently and somehow are able to get proof from that taxpayer through their audit that you have cookies on their computers or software or whatever in their state, then that's how they would establish that you had nexus. I do think it's probably difficult, and there's probably other guidance out there that would help them establish it, but it's the most simplest way of thinking about it. I think that's how you would be able to enforce it or verify it. Okay. And then we have Marketplace Nexus. They are really reaching here with Marketplace.
Yeah, this is pretty aggressive right here. And what this is where the states couldn't get a lot of the individual mom and pop sellers or the smaller sellers to register and collect the use tax, so then they just went after the marketplace facilitator. So for example, Amazon that has the marketplace, they set up the marketplace and really they just connect the buyer and the seller. So the state said, well, we can't go after every single one of these sellers, so we're just going to go after the marketplace facilitator and require them to register with the state and collect tax on all the transactions. So Washington previously passed a law that said, any marketplace facilitator here has nexus and is required to collect sales tax.
Yeah, I think you would want to reiterate on this. I mean, like the growth of their nexus expansion attempts. A lot of this was likely to try to get a state to, knowing that this is unconstitutional, to get it heard by the Supreme Court. And, affiliate nexus didn't work. Click-through nexus hadn't worked. Cookie nexus, relatively new, still hadn't worked. Let's make a requirement that the Amazon, wouldn't it be easier for Amazon to collect a tax for all their remote sellers? Instead of, enacting a law on all these remote sellers, through the Amazon marketplace that require them to do it, that could hurt your maybe voting power when you're up for re-election next year if you sign on to a bill like that. But let's get the marketplace providers. They're big. They've got lots of money. What's a little bit more cost to them to comply and just collect the tax for the remote sellers. I think it was just another attempt to go around the physical presence law, and this also didn't get picked up, by Supreme Court. And then, however, we have the notice of reporting requirements, which there was a court case that did get picked up by the Supreme Court. I'll let you set it up. Go through this.
Yeah. So I think the states realized that the way that they're going about it wasn't able to get past the physical presence one. So then Colorado came in and said, well, hey, we're not going to require you guys to collect the remote tax, but we want to know which customers you guys are selling to in state, and we want to know how much, like the amount of volume you're selling. So this is really where the jurisdiction required an out-of-state company to notify customers that the customer must remit use tax on the purchase, number one, and then number two, that out-of-state seller has to send the Department of Revenue a report showing what all customers were in state, how much they sold, things like that. So really still put the burden back on the out-of-state seller, but it allowed Colorado or any of those other states to go after those customers in state and audit for use tax.
Well, this actually worked, though. I mean, this did not expand the nexus requirements or for meeting the nexus requirements in those states. This just placed a reporting and notice requirement out of remote sellers, out of state sellers who didn't have Nexus to report their customers and their sales to those in-state customers, or gave them other options like requirements like sending notices to the customers and other things. I know Colorado in 2010 passed a law, House Bill 1193, back in 2010, which was brought up through the Direct Marketing Association First Brawl, which ended up as a Supreme Court case that affirmed expansion of the Colorado reporting rule. This actually took place, I think the argument was December 8th of 2014, and a few months later, March of 15, the Supreme Court issued its decision and affirmed that the reporting rule was okay. I think in the judgment it was this is important. It was a 9-0, and the opinion was written by Justice Thomas. I know Justice Anthony Kennedy, who wrote the majority opinion for South Dakota versus Wayfair, he also filed a concurring opinion on this that I believe really planted the seed, I guess, for the South Dakota bill to be introduced and then fast-tracked through the Supreme Court and then to today. We had this is just kind of a graphic of the different expansion of Nexus history. Just want to show you guys this a little bit. Complete auto transit set up the 4-prong test, which is the physical presence standard in Wayfair was overruled, and we're going to get into that. But I think more importantly that when it remanded it back to South Dakota's Supreme Court or the courts, there are some other considerations that they have to decide on. Mm-hmm. Well, that does bring us to our second audience poll. And Maddie?
What are the greatest sales tax concerns you have for your business? Increased sales tax collection requirements, increased compliance requirements, increased registration requirements, increased sales tax audit risk in new jurisdictions, or all of the above?
These are some good considerations, and I don't want to weigh in on anybody's answers here, so I'll slowly go into what I want to talk about here. But I know we all might think, okay, well, if we have to file in several states, we just got to register and now start filing monthly returns or collecting or whatever. Registration is probably seen maybe the easiest thing to do, and one-time type project. But we've done 50 state and local jurisdictions as well, registration projects, and I can tell you that not one application looks the same. I mean, they kind of look the same. They kind of ask the same questions, but we've compiled well over 400 or 500 different questions if you combine all the different types of questions asked on these registrations. So if you're going to have to go and fill out 7 applications, what else do you have to file with the Secretary of State? When that happens, is there other applications or other taxes? A registration project can get very complicated, actually.
Yeah. A lot of times it'll ask for officer's driver's license and all kinds of documentation, so it's quite a burden actually on registering.
Let alone now you got to potentially consider sales tax collection requirements, compliance. Well, registration projects, that's a one-time event usually.
Right.
Well, now you have April 15th every 20th of the month.
And all those new jurisdictions.
Filing those 7 use tax returns. So you just kind of drives up considerations of what are you most concerned about. And there's some things we can talk about here in a minute. So we close the poll.
So it looks like the majority selected all of the above.
Okay. Which isn't surprising, right? No. I mean, you should consider it all. We wanted to have specific selections to kind of get people to think about, well, what could be a new risk or concern or a resource stealing time from my people in our accounting, tax department, whatever. Okay. Now we're going to go into the South Dakota versus Wayfair as a background decision. South Dakota versus Wayfair is the most important sales tax court case in decades. Okay, that's hands down. This case and the impact of the court's decision is so significant that it made its way all the way up to the United States Supreme Court, which issued its decision on June 21st of 2018, almost a little over a month ago. Why is it so important? South Dakota versus Wayfair addresses sales tax questions that have been plaguing state and federal governments for years. The U.S. Supreme Court's decision affects how Nexus applies to remote sellers, such as internet retailers and online marketplace sellers, but just want to reiterate, it also applies to any business that sells to customers remotely, even if you don't visit them for any reason. The previous standard for determining Nexus didn't account for these types of sales, and the recent decision has overturned it, which means big changes are in store for remote sellers. This is a little background. South Dakota enacted Senate Bill 106 in March of 2016, which required sales tax collections and remittance for any entity that exceeded an annual sales threshold of $100,000 in sales or 200 separate transactions. So just because we don't think we might get to that $100,000 threshold from a revenue, if you sell 200 separate T-shirts and it's not getting up to there, you can meet that threshold. And the Supreme Court has essentially said that this threshold it doesn't create an undue burden on taxpayers. Following the enactment of Senate Bill 106, South Dakota filed a declaratory judgment action against remote sellers to collect and remit tax. However, Senate Bill 106 was then struck down in March of 17 by South Dakota's Circuit Court, which was later affirmed by the South Dakota Supreme Court. So they filed an appeal to the United States Supreme Court, and to a lot of folks' surprise, it was agreed to be heard and was heard on April 17th of this year. Now, I wanted to tell you all about this April 17th because a lot of times decisions aren't turned around in 2 months or so like this was. And why did that happen? There's a lot of speculation. I think we can all consider that the Justice Anthony Kennedy back in 2015 in the direct marketing case issued a concurring opinion, and he talked about a lot of the things that are included in the South Dakota bill. Also, they heard it in April, issued it in June. If you guys haven't paid attention to the Supreme Court, shortly after this decision came out, Justice Anthony Kennedy announced that he was retiring from the Supreme Court. I know this kind of was his baby, I would say, for getting completed before he retired, and he accomplished it. So just here's a little read. We're going to drive up the following requirements again. Gross revenue, and this is South Dakota's law. So it says it's different in some other states. A lot of states are similar, but it says gross revenue of sales of tangible personal property, any products transferred electronically or services delivered into South Dakota that exceed 100,000. I want to make sure that people know that some states will say I think there's a state that says it's just tangible personal property. Some states say tangible personal property, taxable services, or other services. It's really what's included in that threshold. So if you think if I'm providing a service here in Texas, an accounting service, and I have a bunch of North Dakota clients because we have a lot of oil and gas clients, just because we never go to North Dakota, it's so far away and it's prohibitive. We could establish Nexus just by meeting the threshold, because it's just or services. Well, what does that mean? It's just it's really the customer receives the benefit. It's what I think, or 200 or more separate transactions. So, like I said earlier, the majority opinion was issued by Justice Anthony Kennedy. The the ruling was decided 5-4 in favor of South Dakota. And I think this came as a surprise to many, as when the oral arguments occurred, it kind of left the impression that the court wasn't going to overrule. I was surprised. I think there are others who weren't surprised. I know George, who's not on this call today, would maybe say, yeah, you thought it could go both ways. But I really didn't think. I've been doing sales taxes for about 13 years, and I've only known the physical presence rule, and I just couldn't imagine it changing. It's been that way for forever almost. So, but it did, and
also the way that companies do business these days is so much different than back in the 80s and 90s, where now it seems like the majority of sales on the are made over the internet to buyers, whereas back in the 80s and 90s, it wasn't like that, and so a lot of states are missing out on a significant amount of revenue. So it's, Justice Kennedy, I think, realized that and said that, will should no longer be the rule of the land. States should be able to impose economic nexus, basically.
Mm-hmm. So another point is all the justices, even though it was a 5-4 decision, all the justices agreed that Quill was wrong. But they set, what's funny is that they set Quill, they set the physical presence bright line standard. But what they really said in this opinion is they believe this was a judicially created tax shelter. And even if it was a tax shelter, the fact is that everybody's been abiding by these rules, and that's how they've been conducting their business. Some may not have had the privilege of having being a remote seller in other states, but for the most part, we just needed clear law that told us what to do, and I thought it was clear back then. And now without the physical presence being that law of the land, things are changing, and now we know economic nexus is in play. But what about now? What about the affiliate nexus, the cookie nexus, the click-through nexus, the marketplace? Are those also in play as well? These are things that we're going to have to consider. I can tell you that things aren't going to just change. They're changing drastically, but it's going to evolve over the next several months, maybe years, until we either have Congress act or all the states get their various nexus laws in place, and we've all worked it out ourselves, right? All right. Well, wanted to point out a couple things specifically about the case. The court specifically addressed South Dakota's law. It said nexus is sufficient based on economic and virtual contacts. And they said it appears to prevent discrimination against undue burdens upon interstate commerce, specifically because they had the thresholds in place, and that they're also they said it prohibits retroactive collection. No state has said they'll come out and apply retroactively. But when does the date actually start? Is it the date of June 21st, 2018 of the Supreme Court decision, or is it the date of maybe the future South Dakota remand decision, or is it the date that they set that law as effective? I think we could be confident saying that is at least the date of the decision forward. What will states do now? They're definitely going to be taking legislative and regulatory actions. They're already busy. I mean, we're seeing new stuff come out every day. Even you'll see in a little bit another slide that we'll talk about in a second. But they're all adopting or considering adopting economic nexus standards now that this decision has come out. States with laws in place can immediately begin requiring remote sellers to register and collect taxes, assuming they have that effective date in place, and we'll talk about it a little bit. Another thing is, are they going to offer amnesty or voluntary disclosure programs? Is that even necessary? I know that I've heard a lot of commissioners are going to the Multi-State Tax Commission annual conference here at the end of this month and have on their agenda to maybe work out some centralized process for application, or get the multi-state tax commission to administer some sort of amnesty program to help, alleviate the burden on taxpayers, and have a centralized process for doing this across multiple states, rather than going to, state by state. In the local jurisdictions, is there a statewide collection system? Guys, there's over 12,000, taxing jurisdictions across the United States. It doesn't mean there's 12,000 sales tax jurisdictions across the state. There are quite many where there's not a statewide collection system, like Louisiana. Is the local going to be? How is that going to affect them? And how are they going to try to capture? And then how are taxpayers going to work to administer and comply with those new laws?
Yeah, the local taxes can just be a nightmare, because a lot of times, I know in Colorado, for example, a lot of the home rule cities don't follow the same taxability that the state of Colorado says. So it says, milk might be exempt from the state tax, but this local jurisdiction imposes tax on sales of milk. And so, then you have to follow a whole new taxability rule set, as well as collect that local tax and remit it to that jurisdiction. So it's just, it's administrative burden.
Right. And even if the states come out with this economic nexus, I think the locals would have to do the same.
Yeah, I think they would.
And so they're screened. So it's really affecting a lot of people. Currently, we have 24 states that have specific economic nexus thresholds in place. It says currently there's 18 effective or not pending litigation. As of late last week, Minnesota joined this group, and it says really 19, and then 5 pending injunction or other review. So here's kind of a little graphic for you all to see the states that have enacted or passed economic nexus legislation and aren't pending, additional review by states, Commissioner of Revenues, or under litigation, and add Minnesota to this one. And here's another graphic to show, the other states that have litigation pending for whatever reason, or currently under review.
So this is moving fast. There's a lot of states already on board with this, which is...
Well, a lot of these states wrote their rules really to mirror South Dakota's. I think there's 13 or 14 of them that have the $100,000 threshold in the or the 200 separate transactions in an annual year. I think Pennsylvania and Oklahoma and Washington have lower thresholds, and then a lot of the other states will set it at 250,000. Some have it at 500,000. Some have a dollar threshold without a number of transactions threshold. So you can see how complex and how they're all trying to figure out what. Well, when South Dakota's bill came out, it was easy for them once they knew that it was going to get picked up by the Supreme Court. The states could just mirror that, and so when it was decided in their favor, if it had been, that theirs would just piggyback off the same requirements as South Dakota's,
right,
and could be active right away. There has been some congressional action. 2 bills last year that were really for states to receive remote seller collection authority. This was a Remote Transactions Parity Act and the Marketplace Fairness Act of 2017, which are no longer active. And then there's been 2 bills that keep quill and restrict the authority of the states. There's No Regulation Without Representation Act of 2017, which is no longer in play. But recently, there is the Stop Taxing Our Potential Act of 2018, and that's currently has been introduced. All right, here's some additional implications just to consider. All right, what are the considerations for local sales tax? Is there a small business exception? There is. We don't know if it can go lower, though. We just know that the Supreme Court said $100,000 in annual sales or 200 separate transactions. But we don't know if that can be lower. Or is it? We know where it is right now, at least. What is an undue burden? What are the implications for other taxes? And Aaron's going to discuss a little bit about the income franchise here in a little bit. And will Congress act? I mean, we've seen Congress try to act several times. I wouldn't hold your breath on that one, but it could if it gets messy here, you know.
And I mean, ever since 1992, when Quill was decided, it was decided using the Commerce Clause, which Congress has the authority to regulate. So really, since 1992, Congress could have passed, Congress could have acted and done something, and they haven't yet. There's a lot of pressure on them now to do something, but I guess we'll just have to wait and see.
All right, we're at our audience polling question number 3.
The question is, how many states does your business have no physical presence and meet the threshold of 100,000 in sales or 200 separate transactions? 1 to 3, 4 to 6, 7 to 10, or 11 and more. While y'all are taking this poll, we also have gotten a few questions. We actually have 2 of them. The first one is, have these states published rules or have them in review following the Supreme Court case?
No, yes, that's a good question. Thanks for asking that question. So a lot of these states have, over the last few years, passed laws which were establishing economics nexus, just like they tried to establish affiliate and agency nexus, just like they passed laws for click-through nexus. Well, they passed laws for economic nexus, but it wasn't constitutional because physical presence was the standard. So until this decision was made, those laws were unconstitutional. And then when this decision came out, those laws are now in play or also under review or further being litigated in their own state courts. Hopefully that answers that question. And then additionally, I'll add on to that is that and then the rest of those states that weren't highlighted earlier, a lot of them, just like Texas, Texas legislates every 2 years. So right now we're not in a legislative year, but the comptroller's already come out with some guidance that it intends to. It's currently reviewing all of our rules, and will issue guidance in early 2019 on how this economic nexus has changed. This decision applies to our rules, if we need to rewrite them or not, and also, a lot of states like Texas aren't in a current legislative session, so we will see over the next year or so, or several months even, new legislation in additional states that either will mirror what South Dakota's law says or have their own thresholds.
So the next question is, will Weaver have a software solution to help with the charging of sales tax to customers on a daily basis for different states?
So I think the answer to that is right now we currently do not. I mean, we don't have that, but what we do, and we're going to go over how we can help you, is we have a lot of relationships with those types of providers. And what we can do is help you figure, what's the best solution for you. But yeah, we don't currently have that. We do help our customers pick which the best software or technology solution that will work with their current ERP systems or not, and evaluate the cost benefit of that solution. Some technology providers and some solutions out there, may not be, they might be the best thing in the world, but they don't apply to a small business maybe. Maybe they do have an offering that way. So really, instead of having to try to figure all that out yourselves, we can help you. We can help guide you in the right direction based on what you're looking to achieve and what they can offer.
I have closed the poll, and it looks like the majority has selected 1 to 3.
Okay. All right, well, we'll move on to the next section, which is impact on businesses. All right, so you all may be wondering, is this going to affect me? Well, to be honest with you, this is affecting everyone. Whether you're a remote seller, you're an online seller, you run a marketplace, Like everybody purchases items. I know I purchase items from Amazon, and if remote sellers are now getting required, they're going to have to start getting, and I'm going to have to start paying, sales tax. But I always remit use tax when I don't pay sales tax though in Texas.
Of course,
so you know. Small businesses, large businesses, service providers, it's affecting us. I mean, this has been a whirlwind for service providers. And getting ready to help our clients comply, figure out what they need to do, as well as tax software and technology providers. So really, this does affect everyone. Why does this matter? We talked about this in the second, I think, polling question, but look, compliance costs. If you have to file and remit or collect and remit and file and register in all these other states, and you don't have a current sales tax, a team or resources in place, do you hire an in-house team to do this, or do you outsource this? There are options for both. There are benefit costs and there are benefits for both. So just something to consider. Like we discussed on registrations, audits. I think this is a big deal. You might be a wholesale distributor who hasn't had nexus in whatever state that you now have an economic nexus in, but you probably consider, well, I'm selling it to someone who's reselling it, so it's exempt sell anyways. Well, you still have a filing obligation, whether it's zero return or not. But now you have nexus in that state, so they have the right to audit you. So just dealing with all the different audits that could come up. That also goes with certificate managers. You could be a wholesale distributor as well. And you haven't had to collect certificates from all these different customers across the different states. Now, how are you going to manage all that? And then the notice requirements and reporting.
Yeah, and a lot of states do require their own specific certificate be issued. And so, if your company is remote and you've never done business there before, you might not know that. So you have to know which.
Well, filling them out properly too,
Right.
And some require that if you're going to get a resale certificate that you have a sales tax permit number, right? So you would, well, if you had nexus in that state, you would obviously be getting a permit number because you would be registering and complying. And then for some companies that required to book reserves, you consider the tax reserves on that, and then. To the question just recently on technology improvements, is my current ERP system capable of even taking a bolt-on? If a bolt-on software to help make tax decisions and collections and set the sales tax rates for all the different locations where my customers are located, and then update those as they change, because they change all the time. Make sure you have the right provider that can help you with that. And then if there's software that you need, if you decide to do your compliance in-house, so you're gonna just manually prepare all the returns and file them and pay them in all the different states, or are you going to get a software for your internal team to help you to manage that, or just outsource it to one of the outsource providers? Companies, here's a couple things companies should consider. Implications for non-filing entities like digital service businesses or inbounds. Review state laws for economic nexus standards. Has nexus been established? When nexus has been established, determine your product taxability for those states. Evaluate options for compliance, like I said, and then the FAS 5, ASC 450 impact on reserves. Just really basically analyze and assess your legal standing in these various states. Other considerations: monitor guidance on enforcement of timing. Not all the laws that have been passed for economic nexus are actually effective. A lot of them are now, but some start October 1st of 18, some start December 1st of 18, a lot start 1/1 of 19, and then as the new states come in, when do their laws become effective? Monitor federal legislation. And then consider income tax implications. Also, one other possible consideration that's not up here is maybe consider centralizing your sales. This is from a purchase standpoint. If you make a lot of purchases and from a lot of out-of-state vendors, even, or just your current vendors, you might have a lot of vendors now trying to collect tax or adding tax to their their sales to you. Maybe consider setting up a centralized procurement entity that can purchase everything for resale. Then you can make the decision where to remit that tax. It'll avoid having to rely on hundreds of discrete vendors to accurately collect and report tax on your purchases. We've been talking about sales mostly here, but there's also an impact on your purchasing.
Mm-hmm. Absolutely.
And these are just some questions you can ask yourself. Which jurisdictions should register? What are these sales thresholds for each jurisdiction? When does tax collection start? What tax rates should be charged? Can our company handle the new compliance burden? And should our company pay tax when purchasing items in new jurisdictions, or is an exemption available? This brings us to our final polling question.
So the final poll is, what level of impact will the new economic nexus standard have on your business? No impact, slight impact, significant impact, or I don't know. While y'all are answering that poll, we do have another question. Do you see throwback becoming an issue again? Inclusion in their state tax return.
I think the question was, do you see throwback becoming an issue again? What if a state does not have a sales tax, then the state the company has physical presence may require inclusion in their sales tax return?
Yes.
That's a good question. I'll be honest, I've never seen a state try to throw back sales from a state that doesn't. It says this becoming an issue again.
Yeah, this is Aaron Humphreys, and we see throwback maybe a little bit more common in the income tax regime. It'll probably just depend on the state. Texas doesn't have a throwback, but Oklahoma and some other states do, so we may see some stuff popping up. It'll probably just depend on the state as far as throwing it back on your income tax returns, if that was the direction this question was being asked.
Yeah, and I really don't think that there's going to be a throwback of sales from non-sales tax states. It's just, I don't think that's ever been an issue, and it's really more of an income tax thing.
I've closed the polls, and it looks like majority selected slight impact or significant impact.
Okay. All right, Section 5, state income and franchise taxes. Thank you, Aaron.
All right. Again, my name is Aaron Humphreys. Just to reintroduce myself, work here with the Weaver Salt team, primarily in income tax. We're just going to switch gears for just this slide. So this isn't really on sales tax. This is more the income franchise side. How does this sales tax case apply to income tax? Because usually when you have one change in a tax type, it'll affect the other one. One thing to note, the economic nexus isn't really new to income franchise tax. There are several states who currently have a factor presence nexus standard, which is an example would be if you have more than $500,000 in revenue in a certain state, it generates nexus in a filing requirement. So we may see more states adopting economic nexus, and we'll be watching this closely. The main thing we wanted to nail down on this slide is that registering your business for sales tax could mean that you also have an income franchise tax filing requirement with the state. And so that's especially important if the state imposes a franchise or gross receipts or a minimum tax, such as California. If you register for sales tax in California, then they're going to say, okay, you need to file a tax return. Well, even if you don't have income or you're protected with Public Law 86-272 from income tax, you'd still be required to pay the $800 minimum franchise tax. So that's the basic thing is you definitely have to pay a franchise or minimum tax, and you may be subject to the income tax as well. It would just depend. Public Law 86-272 is out there, and if you sell TPP, meets some other requirements. then you could be protected from paying the income tax, but you'd still be subject to these franchise and minimum taxes since they're not technically income taxes. So the takeaway is if you register your business, for sales and use tax, you're probably going to be required to file an income tax return, and you just need to be aware that there's going to be possibly a minimum or a franchise tax involved with that, and we're happy to help, decipher whether there is one and how you should approach that.
Well, absolutely, and I know what we're going to go into is how we kind of help businesses comply with these new standards is through our evaluations, really provide the guidance on not just, hey, you have economic nexus for sales tax purposes, but you haven't been filing income franchise tax, and in this state, you're going to need to file and register. And also, some states require registrations with the Secretary of State.
Yeah, they do. Some states, whether you register maybe for sales tax, withholding tax, income tax, they'll say, well, we need your Secretary of State ID number with the registration, so it kind of blocks you from registering for sales tax. If you do need help with the Secretary of State filings, that's more of a legal issue to consult your attorney or registered agent. We're happy to point you in the right direction for that, but we can't actually do the filings for you.
Yeah, but as part of that is we make them aware, helps them make those decisions for registering, collecting, all that.
Yep.
Okay. Well, appreciate that, Aaron. So how Weaver can help? We've offered this what we call tax compliance evaluation services for a long time now, but really this just helps companies address the new challenges and protect the tax efficiency and effectiveness of their organizations. The question you get is where will I need to collect sales tax? Well, our tax compliance evaluation services, we review your existing sales footprint, perform an examination of which states have legislation in place to impose a tax collection under the economic nexus test, and apply it to where your current sales footprint is. Make sure that you meet those definitions, as well as would identify and document any new state thresholds, keep you in compliance once you get in compliance with these new economic nexus tests, as well as update when those tax collection responsibilities are required to start. How do I comply with the new requirements? Well, our tax compliance evaluation services, what we do is we provide clients with a gap analysis on their current systems and processes, which includes providing, recommendations, as you guys asked earlier, on software solutions or potentially outsourcing those services completely. With that, we give you a cost-benefit analysis for these recommended options, and if throughout these evaluations, we may determine we need to register in 7 or 8 states and determine product taxability. We provide all these ad hoc services that help you get in compliance, provide taxability research on the number of products and services you provide. But we also do outsourcing here at Weaver. We can prepare and file your returns as if we were your in-house sales tax team. And help you manage your notices, and your certificate management could be an option for you as well. Our process is fairly simple. I mean, what we do is once we get through the implementation phase of setting up your data, how it's being received by us, and making sure that we get it in the format that's required to get into our tax software, we would basically have a monthly or as periodic secure data transfer to our portal, where we then take that data, prepare the returns, prepare a summary of those returns that need to get filed with the amounts due, and send you the returns for approval. Once we receive your approval, we file all the returns for all the states by the state's deadlines, and we work with a third-party payment processor. So if you have multiple state payments that got to get made, we upload the data to the payment processor, who notifies you to make one single payment, basically funding the account that then they can go make the payments. That way, we're not filing the returns and then telling you, okay, go log into every state's account and make a separate payment. Why would you outsource? So we utilize a third payment party processor to speed up that and make it simple. And wanted to say we have an upcoming Weaver webinar. It's our international tax webinar. It's going to be held on Wednesday, August 29th, 2018, from noon to 1 p.m. Central Time. It's over the international tax from the Tax Cuts and Jobs Act changes. You can register at www.weaver.com/events. And this webinar is going to explore recent changes to the way the United States individuals and corporations are taxed on income earned outside of the United States. If that affects you of interest, we appreciate it. And this is Q&A. Wanted to thank everybody for we received a question. Do you foresee the comptrollers? Okay. Go ahead,
Okay,
Maddie.
do you foresee comptrollers' offices beefing up their audit staff in an effort to hunt for additional revenues under the new ruling?
I'm going to say yes. Yes, I believe our states, as well as all the other states, if they're going to increase based on their budget for the comptroller's department, but with the millions, actually billions of dollars in lost revenue each year that states are losing, that they stand to gain, I guarantee you they're going to increase their staff and their audits to find and get that, make sure that the actual revenue that they were promised through this decision, quote unquote promise, right? They don't really know exactly how much they're going to reap from it, but they have estimates out there for each of the states. I'm sure they're going to be coming after whoever they can.
Okay, so we do have another question. If you have to file franchise tax, wouldn't the revenue be reported twice, once in the state where you physically were, and once where you sold the service to?
Yeah, and that's one for me. This is Aaron. That's probably asking. The franchise tax in other states isn't normally the same as the Texas franchise tax on revenue. The franchise taxes that are in other states, I mean, they're all a little different. Some of them are based on your net worth, and some of them are a flat fee. But it's basically just for the privilege of doing business there. And so it's not, you wouldn't be picking up the revenue twice in two different states. It's mostly just a flat fee of doing business there. It's not based on income or anything like that.
Okay, we also have another question. Did the ruling as it came out hinge on the simplicity of South Dakota's requirements? For example, had the taxpayer burden been higher or more complex, would we be in the same place?
Yeah, I think we would be. I mean, because they've overruled the physical presence test, so we would be in the same place. We would just be under a different set of, I guess, thresholds, right? Yeah, I think we'd be in the same place, just under different thresholds.
Okay, a second part to that question is the door open for future rulings originating from other states that will ultimately contradict Wayfair?
Could you repeat that question?
Oops, sorry. Is the door open for future rulings originating from other states that will ultimately contradict Wayfair?
Yeah, I mean, yes and no. I think right now you can't contradict Wayfair. It would have to go back up to the Supreme Court, and then those would have to get decided. But those other states that have rules or laws that are passed that are not in line with South Dakota's law, yeah, they could be subject to additional legislation, additional litigation, and it could impact the current law. But I think what you should come away from this conversation today is that this is changing. It kind of happened overnight, but it's not, and it's going to evolve as the states react and taxpayers try to comply. So.
Well, thank you so much for answering those questions, and thank you everyone for submitting those questions. I want to thank everybody for joining us today. After the webinar concludes, you will be sent a short post-webinar survey, so please fill that out. Also, tomorrow you will be sent an email with the recording As a reminder, if you would like the handout of the slides today, download them in the right sidebar. Also, if you would like CPE credit, in tomorrow's email, it will have the next steps on how to receive that credit. Again, I want to thank everybody for their time today, and I hope everybody enjoyed today's webinar. That concludes today. Thank you.